Hi, everybody. Welcome to the MIT Social Entrepreneurship Alumni Group Zoom event, conversation about impact VC landscape in Latin America. I am Sayuri Sharper, president of the Alumni Group and moderator of today's conversation. I'm pleased to have our guest today, Rodrigo Villar, the founding partner of New Ventures based in Mexico. Today's event is an interactive conversation with Rodrigo. I'll start with a set of questions, then we'll take questions from the audience. Please use the Zoom Q&A function that you see on screen to enter your question at any time during the session. However, we will hold the questions until the first set of questions that I'll be asking Rodrigo. And then let me introduce Peilan Su. She is our VP of Membership and will be my co-host. Peilan and I will alternate posing questions from the audience to Rodrigo. And then we'll try and get to as many of your questions as we can. I know that a lot of you are probably eager to learn more about what's happening in Latin America from Rodrigo. So we'll do our best to get through as many questions as we can in the next hour. Before I get started, I'd like to say a few words about our alumni group. So we are organized under MIT Alumni Association. Our mission is to bring together MIT alum and like-minded people to co-create a better world through entrepreneurship and impact investing. Terminology is important. So let me define what I mean by social entrepreneurship and impact investing. So for social entrepreneurship, we consider any organization that is addressing unmet social need or environmental problem through a market-driven approach. And in terms of impact investing, we think of them as investment made with an intent to contribute measurable positive social and environmental impact. And the key here is the intent of the investor. So if any of you are not a SEAG member yet, I'd like to invite you to join us. In addition to webinars, we also host member live pitch sessions, mentoring programs, and other networking events to connect our members to each other. To join, please go to mit-c.amn.co. So without any delay, it is my pleasure to introduce Rodrigo Villar. Rodrigo, would you unmute yourself, please? Rodrigo is a founding partner of New Ventures based in Mexico. New Ventures provides financing, acceleration, ecosystem building, and advisory services to social entrepreneurs and impact investors. Additionally, Rodrigo is also the founder of Las Paginas Verdes. I'm pretty sure I'm not pronouncing this right. Organizer of EcoFest events and the FLII, Latin America's Impact Investing Forum. Both focus on the development of the impact investing industry in Latin America. So please join me in welcoming Rodrigo. Hi, how are you?
Not so bad.
Well, we just heard we got started that Rodrigo had an accident yesterday. But we're so pleased that he still joined us today. So thank you so much, Rodrigo.
No, it's a pleasure, and I couldn't miss it. I had a small accident. I fell from a ladder, and besides, I have to use this for a couple of weeks and this for a little bit more. Everything's okay. And
Oh, that's good. That's
it's a
good.
pleasure to be here with you. Thanks for the
Yeah,
invite.
sure. So let's start with a little bit of a background about you. So if you could tell us how you got started in the impact field and kind of your journey until today, that would be fantastic.
Sure thing. So I did my MBA degree in a very similar school with that MIT, but it has an R at the beginning. So it's a Royal Melbourne Institute of Technology. I usually said that I did study in MIT. So before the MBA, I was in the corporate world. I was working for the Treasury Department of a very big conglomerate in Mexico, and that was when I was in the MBA degree. This goes back probably 17 years ago, and that's when I really started listening about entrepreneurship and VCs. I mean, here in Mexico, there was not much before that. It was like not even social entrepreneurship. The whole entrepreneurial ecosystem pretty much didn't exist at all. I mean, there were people doing business in any country, but there was not like a really, develop ecosystem to support entrepreneurs. So I was really lucky to got hired by a nonprofit. It's a think tank called the World Resources Institute, that they were looking to somehow bring the private sector into be into support the global transformation. So we believe that if we use the power of the private sector, a lot of the social environmental issues could be tackled in a much faster way. So that was the purpose of New Ventures. So I was hired, and eventually the program ended. So I keep with my team, and we did a spin-off, and we become an independent organization. We kept the purpose. So that's the way we started New Ventures. We started with the idea I mean, 17 years ago was very different than what we have today. When we said 17 years ago about environmental businesses, there were very few. There was not even pretty much in the press or in the universities. It was a very new thing. So we started looking for those entrepreneurs that were working with technology, innovating in environmental fields, and we support them to grow, to scale, to link them to different financial entities or investors. And that's the way we started New Ventures, with a very strong purpose. And the story has changed a lot in between these 17 years. We went through organizing the biggest environmental festival, Las Paginas Verdes, what you mentioned, which is the Green Pages. It's a project that we started years ago with the idea of just giving the market, like a broader view of what was environmental businesses, where they can found them. So I started that way in 17 years ago. And I think following the purpose, New Ventures has transformed into what we are now. So we incorporated, we had the accelerator, and then we incorporated a financial entity. So we created probably the first impact investment fund in Latin America. It's called Adobe Capital. So we manage right now about $50 million on assets, and we're investing currently our second fund in Latin America. We're investing in green and social enterprises such as housing, financial inclusion, education, renewables, and different set of mobility and different sectors. So we also created another financial entity. It's not a fund; it's a non-banking financial institution that works more like a fintech, where we're trying to get to a smaller market of entrepreneurs that need smaller tickets. It has a very strong gender focus. We created the first LGBT plus dedicated product so we are funding now the LGBT community. And then we also created the FLII, what is a Latin American Impact Investment Forum, that it's a conference that we have been running for the last 10 years. For people that are in this group, probably SOCAP, which might be the SOCAP for Latin America. So it's just like a conference where we gather the main actors in Latin America that are working in the impact investment field. And more recently, we just created another area of new ventures, a new division. It's called Innovative Finance, where we are addressing the needs of investors, family offices, DFIs, where we are supporting them to create new financial vehicles and better ways to approach how if they were interested to do things in Latin America. So that's a little bit of the story in New Ventures. I mean, we have evolved from being just an accelerator to a group that we have these all these entities, but always guided by our purpose.
Wow, Rodrigo, that is a lot of stuff you are involved with, and really for a very long time, considering where Impact Field was when you started 17 years ago. So in this last years, what is your assessment of the current ecosystem in Latin America to support social entrepreneurs and opportunity for impact investors?
Well, so Latin America is a very big continent,
Yeah.
and it has a lot of different countries and different things, but I think it has evolved a lot. I think it's still tiny. I think we are probably 10 to 15 years behind what you see in the United States. Uh, the market is not as sophisticated as in the United States as well. Just for taking away the impact sector, I think just traditional entrepreneurial and VC ecosystem in Latin America, it's starting to grow. We're starting to see those very big Series A. We're getting those first unicorns in the region, but still very few. I think the market is still not big enough to have much more success stories in terms of these unicorns and those big companies. But yeah, every time we have many more VCs interested in funding early stage companies with bigger tickets. I think for me the biggest problem we still have is exits. So we have a lot of great entrepreneurs, but I think just copycat the VC ecosystem of Silicon Valley to El Salvador is never going to fly. I think we need to be very creative and find different ways to address the needs of these companies. So, and I think that we have been pioneering I mean, me and other colleagues in the industry and the ecosystem, trying to not just innovate in the approach of the impact, but also innovate in the structure of different financial vehicles to be able to invest smaller tickets, which is probably something that we're going to see in Latin America, probably except Brazil, sometimes Mexico. But I think we need to find different investment vehicles to really get to the needs of these entrepreneurs. There's a lot of problems, having different regions. Even though we speak the same language, most of the countries, we have different rules, we have different tax legislations. So it gets complicated when you want to,
Yeah.
I mean, we tend to think about Latin America as a single entity, but it's not.
Yeah.
There are many countries. Some are right-winged, some are left-wing, some are more dictatorial style. So it's very diverse, Latin America.
Yeah.
But there's a lot of innovation, which is what is exciting.
Yeah.
I think there's a very entrepreneurial spirit and a lot of people doing very interesting things.
So if you are starting a pre-seed or early stage, what's your path to get the early capital? Are there kind of local investors that are there that will kind of help fund, or is really all this relying on getting networking into US or Europe or somewhere in the West?
It's getting there. I think every time there's more people interested in VC. So just recently, probably from three years ago, we started getting the pension funds. There was a new legislation where you can attract funding from those pension funds through a public entity vehicle. So we see the pension funds, which are probably the biggest investors in the region, at least in Mexico. Now they can invest in VCs, and they are doing it. Probably not as much as we would like to, but they are getting there. And of course, a lot of family offices are getting interested. They are allocating a portion of their assets into VC funds. But the true story is that the funds that already reached their vintage and closed, the returns have not been as we would love to. But I think there's a new vintage for probably funds that have been investing probably the last 7 to 5 years, where they have some unicorns, they have a lot of great companies in their portfolio. So I think in a couple of years we're going to start seeing better results from the VC ecosystem. So, and I think that that's going to support more people to get in.
Yeah.
The other thing is, I think there's a lot of interest of smaller investors, but I think investing in private equity is still very complicated. It's not an easy investment. You have to do capital calls. You have to get a lot of taxation issues. So it's not a easy investment to follow on. It's not that you just put the money and forget about that for 10 years.
Yeah.
You constantly have to be doing capital calls and do taxes filings every time there's an exit or something. So it's complicated. I think the investors we have locally are bigger family offices where they have people, paid people in their family office to really go through the whole process. So I think there's an opportunity to find ways to do it much more simpler and to find vehicles where you can attract smaller investors. The other thing that it's a very big problem that we're facing all across the region is currency exchange. FX, as you mentioned, for us, probably half for investors are from overseas.
Yeah.
Or just in Mexico, for the last 2 years, our currency is appreciated like at least 30%.
Yeah.
So when you have to return your in dollars, I mean, you're 30% below. So I think it's very important for local VCs to find vehicles or local investors where you can get your funding in the same currency. Otherwise, it's like, I mean, you can have like the greatest return in a fund in local currency, but when you exchange that to dollars, that's all those returns are wiped out. So that's another big problem we have when facing foreign investors that's more for equity funds. When you deal with that, it's easier, but for equity is very hard since there are not like currently there are not any vehicle or solution for an equity to do like a coverage of your FX in equity.
Yeah. So you mentioned kind of both debt and equity. But normally what I've seen is that for debt, you really need to be of a certain size or at least have, revenue and positive cash flow to get to debt. Maybe you can comment a little bit about what type of debt products and how can that be applied to earlier stage companies?
Sure thing. So what our approach of Adobe Capital, and we actually just released a paper we did with PIA and LAVCA, which is Latin American Venture Capital Association. We did a paper research on what we call RBF, or revenue-based financing. That is part of what there's a lot of booths and people doing research over alternative exits. And I think there's a big potential in Latin America since we have great companies, but we don't have the depth of the industry to really find a lot of exits. So, you have all these VCs with good companies, but they just cannot exit because the companies are not scaling as fast as probably the VC technology firms are doing. So that's really hard. So the approach we did with Adobe Capital is we created a product or RBF, where what we do is we invest. We usually set up an equity multiple that it's around 2.5 times our money. So if, for example, if we invest $1 million in a company, the company is going to pay us 2.5, but the company is going to pay us a percentage of the revenues month by month. So it's a product that it's in the middle between debt and equity, because you still have the flexibility that you have like a terrible month or a terrible cycle. I mean, you don't have to pay pretty much, but then you have like a good cycle, you pay more.
Yeah.
So I think we align timings and risk with entrepreneurs, but we have an exit that is already set up.
Yeah.
So every year, every month, the company is paying a percentage of the revenues we're getting out. So at the time, whenever we get to this point where the companies pay the whole thing, they don't have to dilute themselves, and
Yeah.
we have a very clear exit. So that part has really worked for us
Yeah.
because we have been able to invest in smaller companies. I mean, they are in a growth stage.
Yeah.
We had a lot of exits compared to my colleagues
Yes.
that are just doing equity. So,
Yeah.
and I think there's a lot of boosts, a lot of people finding similar alternatives to just traditional equity. And I think that could be a great solution to push and support the ecosystem. What I think it's still lacking, it's like a very early seed capital
Yeah.
facilities. I mean, there, I think Latin Americans were used to bootstrap a lot.
Yeah.
I think we there's a lot of people willing to put the money into innovation, but in terms of doing it in a much proper institutional way,
Yeah.
it's not there. I mean, probably we have 10 funds across the whole region of Latin America
Hmm.
doing really early stage seed
Mhm.
capital in you know in a proper manner.
Yeah. Yeah. So in terms of what gets funded, or you talked about some unicorn, or at least kind of few very successful social enterprise. What are the sectors that are getting funded and kind of achieving success?
Well, I see a lot of, I mean, some of them are not impact. So the unicorns we have, sadly, they are not impact focused companies. I mean, I think they're more traditional. So a lot of them based in technology. Uh, but in terms of the impact, where we've seen a lot of potential, it's a lot of financial inclusion,
Mm-hmm.
fintech. You know, for me, not every single fintech it's social or impact, but there's a lot of opportunity for financial inclusion.
Yeah.
So I have seen a lot of deals from impact investors, from traditional investors investing in financial inclusion.
Yeah.
In some regions of Latin America, renewables have been big. In
Yeah.
Mexico, probably it's very sad to say, but our president just sent like an initiative to go back to fossil fuels.
Yeah.
So he's taking all the support to alternative energy, which is very sad. Is kind of just to save the petrol company, which is state owned. So that's very sad for Mexico, but some other regions of Latin America that's moving.
Yeah.
We see a lot of innovation in agtech. I think that's something Latin America has a lot to offer,
Yeah.
and there's a
Yeah.
lot of innovation in technology and so agtech, regenerative agriculture. I think we see a lot of interest and a lot of companies doing great things around that.
Mm-hmm.
Education, that's a for me is probably the biggest problem we have in Latin America.
Yeah.
And I think now with COVID and how we're transforming the world to more digitalized way, I think it just opens the opportunity to work alongside finding innovative ways to approach the educational gap we face across the region.
Yeah.
Um, some other we have been seeing is also health tech. I mean, I think there's a lot of potential as well to use technology. We actually are running a couple of acceleration programs to really find out those entrepreneurs working in health tech and supporting them to scale and grow. But I think those are the sectors where I see much more innovation and more appetite from investors would be health, education, financial inclusion, and agriculture, agtech. I mean, and then impact, it's very broad,
Yeah.
you know, like
Yeah.
there are a lot of things that are really impactful, but it's hard to find like a really big market in terms
Yeah.
to really approach it with a BC,
Yeah.
uh, you know.
Yeah. Talking about market opportunity, and I think you explained to us that Latin America is very diverse. It's just full of lots of different countries. So it's not the countries are not the same. But are there opportunity in terms of scaling to go across different countries? How does that look like?
It's happening, you know. For example, our latest investment we did was in a company from Chile that is actually getting to Mexico. It's a company doing circular economy, and we invested we invest in them just to open and start operations in Mexico. So we are starting to see that diversification of entrepreneurs going to different countries. It's not that easy because, as I mentioned, there are differences between legislations and even the culture of the countries, or their approach to some issues. But we'll start seeing that much more regional companies and I think technology is supporting a lot to make it much faster in terms of entering to a new market and expanding. So I would say all of these companies, education, health tech, ag tech, I think we are starting to see more companies trying to scale more regionally and to have this broader view of some other countries like Brazil. It's like a continent by itself. I mean, Brazil, I think is
Yeah.
by far the most advanced ecosystem in Latin America in terms
Yeah.
of BP. And what I like from Brazil is it seems that the Brazilian investors are staying in Brazil. I just recently had last week a call with people from JP Morgan because they just closed their private banking entity in Mexico. And they don't mention that much, but it seems that a lot of investors and rich people or wealthy families, family offices across Latin America are moving their assets to the United States or some other developed countries. So that's very sad because somehow we're trying to bring investors to Mexico, but the Mexicans are not that open to invest in
Yeah.
Latin America. There are so many. Just in Mexico, as I was telling you, this president he just got the Congress approval for this legislation that supports or prioritize fossil fuels.
Yeah.
So we had an investment that just like wiped out with this legislation. So
Yeah.
investors are afraid of investing in these countries because you have a
Yeah.
lot of uncertainty. You have
Yeah.
these changes in legislations every time. So it's something we have to deal for.
Yeah.
I guess that the best way to deal with that is funding companies that are actually technology based and they don't have to rely on government subsidies or legislation. We tend to have very paternalist and populist governments that
Yeah.
sometimes make it hard for companies to progress.
So coming close to kind of my set of questions, I'd like to ask you if you have to kind of give 3 top advices for a social entrepreneur in the Latin America region, what would that be?
Okay, so that's a good question. I would say that for me, the most important thing, and after being here for 16 years in the same thing, I would say the first one, and by far the most important for me, it's sticking to your purpose. Don't move away from that. I think sticking to your purpose will open you a new window of opportunities. You're going to be able to attract better talent since you're going to get people that are mind like it and they're sharing the passion for something. So I've seen that entrepreneurs that have that connection to their passion, they are in a better position to attract talent, to attract investors, and open market. So I think being very very clear with that is very important. If things change, I think you can shift what you're doing, the approach you're doing, but your purpose is going to stay there. So I think always following that star, you're going to get to the same point, even though you can change the approach or the path you tried. So following that is just gonna guide you and find different talent and support. The second one, I would say, stay away from governments. Something that happens more in the impact sector, because if you work for technology and different things, you probably don't have to have that much interaction with government. But when you think in impact sectors, I mean, when you talk about education, financial inclusion, housing, I mean, you're gonna face the government. Even you're gonna be competing with subsidies. You're gonna be competing with change of rules. We have seen so many companies that turn out to be contractors of government. They can make a lot of money, but eventually you have a change in administration and the business can disappear.
Oh,
So just working with government in Latin America I mean, you can do very big businesses, but you will never have like a long-term business. So
Oh,
you want to have a long-term business, attracting VCs, you need to keep away from governments or anything related to that. I mean, I will never, ever again in my life would invest in a company that their business models rely on any kind of contract with the government or subsidy of the government.
yeah.
So I think we need to find like, standalone solutions that doesn't rely on government, but it's still hard, even though it's still hard. And the third one, I think you have to be very brave. I think there's a lot of innovation. A lot of people is afraid to invest in Latin America, but I think there are great companies. I think you have to trust entrepreneurs, and I think you have to really put money in early stage phases, which is still lacking in Latin America a little bit.
Mhm. Well, those are really, really great advice that you're giving us. So my very last question. So what is your prediction for the Latin America landscape in 5 years?
So I think it's going to be grow. It's going to still grow. I think if you are thinking about impact investing, I would say Latin America is one of the most exciting regions in the world, because even though we are kind of a little bit behind, we still have some kind of a developed business sector. It's not probably you compare to other regions or other like Africa, probably Southeast Asia. I think Latin America still have a little bit more of a developed industry or ecosystem. But on the other hand, we have a lot of rich people that are probably more, every time they're more willing to invest, and we have a lot of problems. So I think Latin America could turn into kind of an innovation hub for impact. Impact is very different in different, what is impact in El Salvador might not be impact in the United States. I think every country has different issues and different priorities. But I think Latin America definitely, I would say that it's going to turn into one of the most innovative hubs of innovation in impact. It doesn't mean technology. I don't think Latin America has any. I mean, we have some few companies that were successful developing technology, but we're not. I mean, it's not a region that has like an institutional way to support innovation as you would probably have in some other more developed countries. But I think there is a lot of innovation on ways to approach the market with more in the business. I see more innovation in the business model, and how you incorporate technology into that rather than just develop technology.
Yeah. Thank you so much, Rodrigo, for answering my set of questions. And now let's turn over to questions from the audience. Helen, would you like to kick us off?
Sure. So the first question from the audience, it's actually a combination of two questions from Juan and from Ron. So let's see, Rodrigo, if coming from the perspective of being an entrepreneur seeking funding from an entity like your own, or from the perspective of trying to be an investor and trying to model the investment model that you already have, what would you say would be the ROI, so the return on investment that you're aiming for, the time frame that you're aiming for? And also, since we talked about revenue-based financing, roughly the percentage of revenue that you would be targeting from a company you invested in.
Okay. So the first question, the time frame, I mean, we are a traditional VC in the structure. So we have a 10-year fund plus 2 years in each case. We have 5-year investment period and 5 years to follow on. Our goal or target IRR for fund is 20%. We have a preferred rate of 8%, but our target is reach the 20% as a portfolio. So it's a little bit probably below what VCs are looking for, but since we are kind of like a mezzanine or quasi-equity fund, probably we're not looking for the unicorn, but we are not having so many write-downs, you know. I always say that our fund looks more to get a lot of hits rather to get a home run. So I think we played more safe in that sense and to structure this fund. But most of the funds in Mexico or Latin America have very similar structure, about 10 years, which in my feeling is that is not enough. You know, what I've seen with my colleagues, with our funds, we have a lot of great companies in our portfolios that cannot be sold. So that was pretty much where we created this RBF. And so I think funds, there's opportunity to innovate either into finding longer term periods or to really think about evergreen funds, which I think for us in new venture is going to be kind of the next thing. I think there's a potential to get funds that are open-ended, so you don't have to have a closure date and you don't have to go out and just give away your companies because you have to get your money back to investors. So I really believe that there's opportunity to create different investment vehicles as listed vehicles that can work, or evergreen funds where actually you can stay there for longer. I think companies tend to get a little bit more time to mature, or finding different mechanisms as the RBF. So getting back to the RBF, what we do is we usually get an equity multiple of 2.5. So what is interesting about the revenue-based financing that we do is that, for example, we invest $1 million in one company, the company is going to pay 2.5. The percentage that they're going to pay every month, it's kind of tailor-made. We usually do a financial modeling for each company. That's kind of complicated for us because it takes us a lot of time. We model each deal from scratch. So we always try to find a monthly payment that is not going to affect the company in their growth and their cash balance. So it could be from 2%, 3%, 4%, depends on each company and the amount of the investment. Our expectation is to get that multiple to 2.5 times our money in 4 to 5 years. So if it goes to 8 years, we're going to get the same equity multiple, but our IRR is going to be lower. But the other way around, if the company is performing better than we expected, we're going to get their multiple probably in 3 or 4 years. So that's where we share the risk with entrepreneur. So if the company is growing faster, we go out faster, and hence we have a better IRR. But when we model, our target is like around 25% IRR in the investments we have.
Right. So Rodrigo, this next question is from Bridget Helms. I think Bridget knows you. And she is also the ED of Miller Center, which is an accelerator in US. So her question is, hi, Rodrigo, great to see you. I'm also a fan of revenue-based financing. How can we scale this across the region of the world?
When we started Fund of Adobe Capital, I still have that first white paper. When we asked, it was like an idea, let's do a fund. I mean, we were an accelerator, and one day we said, let's try to create a fund. And the first paragraph or the title mentioned, like, our goal of creating this fund was not, we believe we cannot change the world with a fund, but we can really change. If we manage to have a successful fund doing RBF, we believe a lot of funds are going to are going to follow the lead, or going to try to get more information. So that was, I was telling you before that we did this paper that was actually with the support of the IDB Lab, their investors in our fund, and so we just launched this like a couple of weeks ago. It's public. You want to look for that, or was I can send to you? But we found out some other funds doing similar things in different regions in Asia and Africa. So it has been very interesting. But I think we need to prove that we're successful. We need to get more stories. We need to educate the sector as well. Most of the investors are really traditional VCs. So every time you go for an investor or entrepreneur, you have to, go with an explanation. It's hard to understand. A lot of the entrepreneurs we see, when you explain them, they understand it and they like it. But I think what we have now is entrepreneurs don't know this product. They are educated to just go and find PCs. So whenever they come to us, I mean, they come to us with an expectation to get an equity investment. So we have to get back and to understand the business and propose a different vehicle. I mean, some entrepreneurs don't get it, or they don't like it. Sometimes we face that when we do co-investment with other funds, they don't like it either. So many times we co-invest with other funds, why are you getting paid and I'm not? So you get into those conversations. So I think we need to just to be patient to get success stories. So as we evolve, I'm sure we're going to start to see new funds or traditional funds, but also trying to get back to this strategy of RBF or structure exits. But I mean, again, I think there's still a lot of room to innovate. I mean, we created this product, the first investment we did 10 years ago, RBF. We have learned and we have evolved the way we structure, the way we documentate, and so we have been learning a lot and improving the vehicle.
All right, the next question is from Juan Munguia. So Rodrigo, do you or why don't you invest in big technologies like aerospace?
Because there's not in Latin America. And it's not that there's no technology. I mean, I have seen great technology coming from Latin America, but it's like it's something that you have to be very lucky. It's not that you have the depth where you can go with innovation labs as you probably have in the United States, and you have, you can pick out of 1,000 innovations that are going on. You can pick your winner. Like in Latin America, you don't have that. You just really need to be lucky to find that guy that actually was doing something in his garage and ended up coming with something into deep technology. So we don't have an industry, or we don't have a government, or like the ecosystem of doing innovation. I mean, it exists, but it's not institutional. It's not something that you have, constantly, people coming out from labs, from innovation hubs with innovation. We don't see that. I mean, eventually you get somebody knocking at your door telling I found a solution to innovate in this sector. So what we're really good in Latin America is to adapt to technology. I think Latin America is a very fast adopter. I think now with the COVID crisis, I've seen, I think Latin America has been one of the countries that grew the most in terms of e-commerce. So it just boomed. And we start to see a lot of innovation. I mean, it's not the aerospace, but it's early adoption, and I think a lot of innovation in the business model. That's what you're going to find in Latin America as a constant, not as a lucky shot.
Okay, the next question is from Juan Fernando Ribeiro, and he's starting to say that sorry about your accident, and really thank you for joining us today. And his question is, doing projects in Latin America is like being sent to the Olympics of business. Which do you find the most demanding points of effort in social entrepreneurship in Latin America?
Sorry, the most important
points of effort. What's most difficult, I think, is what you mean in social entrepreneurship in Latin America. Besides currency volatility, any comment, for instance, about incidents or not of corruption?
Yeah, as I mentioned, probably getting away from governments, it's really hard. You want to do something in health, eventually you're going to have to work alongside the government, in any ways. The same thing with education. You will have to find ways. I mean, there's some entrepreneurs working in education, edtech, doing great things. But if you really want to get to the real needs, to the K to 12, which is a mess all across Latin America, then it's really hard to do things, because you have something that it's a monopoly for the government and their unions. So it's even though they know there are the needs, it's really hard to do that. In some countries, people have used a lot the social impact bonds, which is something really typical for the impact investment sector, where you can get private investors getting alongside the government solving some issues, but in Latin America, it hasn't flied at all. I think there's just one social impact bond in Latin America, whereas in the world probably there are hundreds. So I think the governments, it's probably the hard thing you will find to deal with a social entrepreneur. Further than that, social entrepreneurs, I think, compared to traditional entrepreneurs, I always say that social entrepreneurs have an advantage between traditional investors or entrepreneurs, sorry, because if you really follow your passion, you are going to get, another set of investors. As for example, Sayuri, you're part of Tonic, where you know a lot of investors that are actually looking for social entrepreneurs or innovation. So I think a social entrepreneur, if it has a market-based approach to approach a problem, you can knock the door to traditional investors, but you also can knock the door to the non-traditional or impact investors, which is growing every time. Every year this industry is growing more and more. So I think social entrepreneurs will have much more support than traditional entrepreneurs. Again, you're facing problems, but some other incentives of being a social entrepreneur is that many times you can use the power of your purpose to get better talent, to get mentors, to get other set of investors. So if you really believe in what you're doing, you're going to have many more resources than traditional entrepreneurs, and if you use it wisely.
All right, the next question is from Vadaveran Collective. The question is, what kind of ecosystem development funds have been the most helpful for Latin America and for discovering social businesses?
Mexico, we used to have, before the president we have now, we used to have like the INADEM, which was an institute for supporting entrepreneurship. And I think they did a great things. They actually, I don't know if they did it in a proper way, but certainly they put a lot of money into, dozens of new funds. So the government functioned like an anchor investor to the creation of a lot of VCs. So that probably happened 5 years ago or 8 years ago. And probably from that cohort of new funds, probably a lot of them disappeared, but some of them stayed and actually are doing really well. There are a couple of funds that are, early stage, real VC investors, and they're growing. So I think that was a good call from the Mexican government. Some other governments like Chile, Peru, they're starting. Colombia, they just recently also created like a fund of funds entity funded by the government for the creation of new funds. So I think it depends on country to country. I would say where you can have something, it's small, it's Colombia, Chile, Peru, Brazil, Mexico, all the other countries are still very small. It's not that you will not find entrepreneurs there, but for example, Argentina, I think for me, the best entrepreneurs I ever seen in Latin America are the Argentinians. So a lot of investors would say, like, I would never invest in Argentina, but I definitely would invest a lot in Argentinians doing business in the region because they're really good. I think the best entrepreneurs I've seen are the people from Argentina, but the volatility in the country you cannot get in. It's really tough to do investments in Argentina. But you always get surprises. So that's the beauty of working with entrepreneurs. They can come from anywhere.
Okay, the next question is from Ana Ramos. So her question is, how many investments do you do per year? What is your average ticket size and the stage of the companies you invest in?
Okay, so for the fund, for Adobe Capital, our average ticket size is about $3 million. And we are very slow, I have to say. It's something we need to improve, but we probably do a couple of investments per year. So the fund is not a VC where you invest like in 100 companies and then you do Series A of a few of them. As I mentioned, we're looking more for lots of hits and not the home run. So our fund is going to do between 8 to 10 investments, about ticket size $3 million. So we are not a very active fund doing a lot of smaller investments in early stage companies. So ticket size about $3 million. We can go all the way probably from 1 to 7 million our investments. And so that's what we have in terms of Biguala, but that's what we created. Biguala, it's the financial entity I told you before. There we can do investments that are around $75,000. And we're doing also RBF, and we can deploy the resources in 70 hours. So it's more like a fintech where we can get the information that's coming back from the taxation system. So in that financial institution, what we do is that we link with technology the account to the tax payment entity. So we get a percentage of the revenues that they declare on their tax file. So we using technology, we can reduce a lot of the modeling, and we can deploy in around 75 hours. Or in the VC fund in Adobe Capital, usual investment takes up between 4 to 6 months, if not a little bit more.
Rodrigo, you're really leading the way in structuring new types of fund. In addition to revenue-based, now you're going a different direction. I wonder, are there other folks like you that are kind of doing these new structures to try to kind of solve the actually it's a business model problem, right, for financing social entrepreneurs?
Yeah, I think there are a lot. I think every time more and more people is getting together to trying to find these different ways of doing it. Actually, we created a group of funds that have an RBF approach, or they are willing to do it. So this group, we have like monthly conversations, and every call we have probably between 40 to 50 funds that are thinking about doing something similar, or they're shifting, or they're trying to understand. So I think this industry of RBF is gonna grow, because definitely see in Latin America, we have some unicorns, we have some success stories, but as a portfolio, we haven't got to a point where it's an attractive instrument for investors. Like I think right now most of the investors we have are DFIs, governments, some bigger family offices, but still very, very, the LPs the list of LPs you can reach in Latin America, it's very small.
All right, the next question is from Juan Munguia. Do you believe that companies in Mexico can be a point of connection between Mexico and the United States, as TLAN, so that's TLAN, has opened new commercial opportunities, or are you seeking just companies in Mexico, or just Mexico and Latin America?
No, I think Mexico is still a very big country. Like it's hard to think. Sometimes you find entrepreneurs that have like $2 million in revenues, and they want to go to 5 different countries. So, Mexico, it's the 13th biggest economy in the world. So the market is pretty big, but, sometimes entrepreneurs, they want to be global before, getting all the market where they started. So I think for some industries, you can just stay in Mexico. The market is big enough to have companies. For some others, some companies like Rappi, which is probably this unicorn, Colombian unicorn doing delivery. It has been amazing how fast they grew all across Latin America. In probably in less than 2 years, they were pretty much in every city in Latin America. So it was amazing the way they did it. And there are some other not successful companies. All these mobility scooters. There was a company that raised like $150 million as like a serious, like seed investment. It was just unbelievable that investment, and the company disappeared within a year. I always believe that they thought that technology was going to be very useful, but I think whenever they started with permits, every single municipality in different countries, different cities, different municipalities, it was just not you couldn't handle with that, because it was like kind of the app or the user experience worked pretty well, but then the operations, the permits, the corruption. I think every single president of municipality authority will start asking for money in order to a little. So that's kind of Latin America. You have to deal with government, and you want to do it at the same time with 50 different governments. it gets complicated.
Yeah. Okay, Rodrigo, I think we're coming to the last question since we have only 3-4 minutes left. So the question is from Badavaran Collective. What kind of engagement do you have with companies that you do not invest in? And also, how do you discover social entrepreneurs?
So as I mentioned, we run acceleration programs. That's the way we start as new ventures. So we support about 200 entrepreneurs per year with technical assistance and acceleration programs. The way we find out to make this sustainable is that we partner with different corporates or foundations. So for example, right now we are running a program with IKEA, another one with T-Systems, another one with MedLife. So each of those programs, we target a specific problem. For example, the one we're working right now with MedLife, it's in financial health. So we are trying to find out companies all across Latin America that are working in financial health. And then we're going to build a cohort of 10 entrepreneurs. We're going to provide them support. And we're going to develop a financial mechanism to put some money into those companies. So we have been doing that for 16 years. So we have also the FLII, the conference. So that gives us like a very big visibility of all the activities is going through in impact. So I don't think it's a secret sauce. I think it's just being in the market for many years and building a lot of trust, relationships, partnerships. I think since we are, as I mentioned, we're very linked to our purpose. We always share. We have a culture of always sharing what we do to other funds. I mean, I think we tend to be very open because we want more people to get into impact. So we need to be very open. We cannot be, usually VCs are very close. We're going to close the door. They're kind of a black box of what they do. We think they're completely different. We always are open. We are sharing what works and what didn't. So, but I think that's the way we found entrepreneurs. I think we screen about more than 1,000 entrepreneurs every year at least, and we support about 200.
Rodrigo, I have to say you're amazing. I mean, all the work that you're doing to help both social entrepreneurs and the impact industry to do well in Latin America. And again, thank you so much for joining us today, and get well.
I have a permanent like. So.
Yeah, all right. Thank you so much.
It was a pleasure.
Bye, everybody.
Bye-bye.